Good morning and welcome to the Haven Financial Group radio show. I'm Larry Colvig, founder and CEO of the Haven Financial Group. Thanks for listening this morning. Kyle Thomas, certified financial planner, is with us. Kim, he's on the investment team at Haven. And we're going to talk about all this fun stuff we do every week, interest rates, tariffs, and taxes, and all the things that could adversely affect retirement. But we're hoping if listeners have a plan, it won't adversely hurt. So good to be with you, Kim.
It's great to be with you. Great to have Kyle with us this morning as well. Yeah, I mean, a lot of people are very concerned about what's going on out there in the big bad world. And you just named a few of the issues. There's tariff issues, and, we're all waiting to see what kind of expense that might mean. There's a new big, beautiful bill, which is now a new big, beautiful law. And the people aren't exactly sure how that's going to impact them. So a lot of things out there, and it makes people, I think, of all stages in their life nervous, but certainly people who are getting ready to retire or retire are feeling a bit insecure. Are you guys finding that on a regular basis?
We are. If people's heads are spinning because they hear this and then they hear this and then they don't know about this, and I completely get it. Sometimes as humans, we can overwhelm ourselves with news, and I'm all about being in the know. But you can't listen, or you can't believe everything you hear. So our job is really to, give our clients and folks we sit down with confidence, talk through these concerns, valid or not valid, and then the solutions to protecting that retirement, or what can they do, or what does their plan look like? Has it been modified? Has it been changed? Maybe they've never had a plan. And having those conversations does put confidence and reassures people that everything is going to be okay.
Sure. Well, this morning we're going to talk about why this uncertainty really doesn't have to bother you when you're in retirement. And certainly Larry has laid out a few of those pointers, but we're going to break it down here. We're going to start with the Fed, jobs, stocks, and news moving the markets. And then we're going to talk a little bit about why your finances don't have to care about the way that the markets move, which is probably a surprise to a lot of people. We'll talk a little bit about annuities. We have talked about them in the past, but we're going to talk to them in this context, how they could possibly help your finances so you don't need to worry. And then finally, we'll talk about long-term care and life insurance and how that can really play a role in your life if you're on a fixed income in retirement. Again, Kyle Thomas is with us, certified financial planner with Haven Financial. Always great to have him with us. And we want to talk about some of these world events, what's been happening and what's been scaring people. So Kyle, let's start with you. Why don't you talk a little bit about some of the events in the world that have had an impact on some of your clients, but maybe don't need to? Like, for example, job growth. Let's start there.
Mm-hmm. Yeah. So some of the big events going on right now in this year, 2025 at least, are the inflation, jobs, interest rates, tariffs, all of that stuff. And it all is tied together. And so job growth, jobs have been pretty steady throughout the year for the most part, right? The Fed was kind of waiting for unemployment to rise up before wanting to trigger any cuts. And that had been pretty steady for most of the year. So that was one of the two things that they look out for: job growth, or unemployment, I should say, and inflation. Unemployment remained steady. Inflation was kind of slowly cooling, but it was still kind of higher. So that's kind of where the Fed has been at for this year. Now, job growth has slowed sharply over the last couple of months. They actually had to go and revise the job growth numbers from the month prior, from last month's Fed meeting. And that actually caused the market to decline because people were actually anticipating a good chance of a rate cut. And then when those numbers got revised, that made the market drop because then, the outlook didn't look as positive for a rate cut.
Absolutely.
So there's a lot of information out there. And then, tariffs, that's always going to be a speculative thing about, does that drive more inflation? Because if inflation goes up, then the chance for a rate cut goes down. So there's different, characteristics out there that are causing actions. But, I will say there's some recent news actually this past week that Trump appointed a new voting member into the Fed. So someone that he's been vocal about wanting rates to come down and get cut. This person that he appointed, I'm sure, will vote in line with what his beliefs are. And last month there was already, two officials that were different than what the general consensus was with the rest of the voting members.
Sure, absolutely.
So we could see some more action going on here at the next meeting, and there actually is 3 anticipated rate cuts by both Goldman and JP Morgan for the rest of the year.
Uncertainty certainly seems to be what's spurring a lot of these, I'm not going to say negative, but controversial or unsettling different statistics that you just talked about. So how do you approach your clients, your retirees? How do you settle them down to say, listen, I understand uncertainty exists. It does a lot, and there seems to be a lot of uncertainty right now. And how do we deal with this?
The biggest way that we do that is us accounting for inflation, and us accounting for inflation that would be higher than what we'd actually think the long-term number is. We're pricing in right now in our retirement planning projections about a 3% inflation number. The Fed is targeting about 2% now long term. We're not at that 2% yet. Another reason why we haven't seen those rate cuts. But long term, they're targeting about 2. I'm guessing it'll be slightly higher than 2. Maybe like 2.2, somewhere in there. But we are projecting out 3%. So now what that does, now we are, above what that long-standing inflation number would be, and that we're being conservative in our estimates going forward because that inflation number impacts our purchasing power. And if our inflation number is, 50% higher than what the actual number will be for the next 20 years, then we're going to make sure that we're in a good spot ourselves for our projections, because we don't want to plan for a 2% inflation number and it actually ends up being 2.5, because that's where we can run into problems. So we just want to make
planning for the worst, but hoping for the better.
Exactly. Yep.
Yeah. And now, is that a strategy, Kyle, that we would have seen 6 years ago? I mean, are you always sort of planning for the worst, or is that a result of maybe what we've seen over the last 5 years?
It might have been something that's kind of evolved. As time goes on, we know more and more just based on history. And we really had a moment from these last few years that we haven't seen before necessarily, with the interest rate changes, with the massive cuts from the COVID era, and then the interest rate rising, in 2022 and then 23 in that time period. So that was a time that we hadn't really seen before. And inflation got out of control in those couple of years. But we're always wanting to plan conservatively. So that's something that we're always doing.
Sure.
But the inflation number, I guess, that's something that we're maybe keeping a little closer tabs on going forward, and making sure that we don't underestimate that in the future.
The conversation, if I could add, 6 or 7 years ago, per your question, Kim, it may have been a little bit different, but consistency is extremely important. We've always factored in inflation. Yeah, that the conversation may have been a little different, but it would have been very, very similar, because all the variables that affect retirement, from interest rates to inflation and all of these things, they've always been around.
Sure.
To maybe a different level of seriousness. But in all our conversations with those that have very, very little to a lot of money, assets, et cetera, complexities, we're going to have a consistent conversation, talk through the same questions. And by doing that, it brings peace of mind to people that, man, nobody's ever explained it to me, and nobody's ever given me the time, because we only get maybe 1 meeting a year or 2 meetings a year. We're going to give you the time to know that we're actually paying attention individually, because it's not one glove fits all.
Sure. So I think what we're taking away from this, and we certainly hope that our listeners are taking away from it, is that, yes, these can be uncertain times, but steps can be taken if you have a plan and you have a partner. Steps can be taken to alleviate some of the stress that these times bring on.
100% accurate. Couldn't have said it better myself, Kim.
So if you'd like to come in and meet the folks there at Haven Financial Group and talk about a plan, you need a plan. You got to have a plan. You know, a plan helps you from staying awake at night and being so stressed and worrying about these times that are uncertain. Give the folks at Haven Financial Group a call, 612-504-8400. That's 612-504-8400. When we come back, we want to continue our conversation with Kyle and Larry. We're going to talk coming up next why your finances don't have to care about all of these moves in the markets. This is the Haven Financial Group Radio Show.